We are on our first example of liquidation and the accounts that need to be done for the liquidation process. And this question is called minor and mega. So a minor is a company that is voluntarily liquidating its business. And this other company called mega is now taking over some of the assets and the liabilities of minor Pty Limited. They've given us a summary of how the purchase price is made up. They say property is being taken over by Mega for 500,000, machinery at 200,000, inventory at 50,000, debtors at 42, and then the long-term loan is also being taken over, and that reduces the purchase price at 150,000 rand. Then they say the selling price consists of a full cash payment on the date of liquidation. So I highlighted that information just to quickly stop there and explain that when there is a purchase price or a selling price, it depends on the perspective. If we talk about mega, it's a purchase price. If we talk about minor, it's a selling price. But this price is made up of only a full cash payment. In other instances, mega can also issue some of its equity or preference shares to make up for the purchase price from its perspective. But in this instance, mega did not issue any of its equity. So this payment is only for cash. Then they say the following is the statement of financial position of minor on the date of liquidation. And then we have non-current assets, property, and its accumulated depreciation, machinery, its accumulated depreciation, vehicles together with its accumulated depreciation. And there's also some current assets in the form of trade debtors, inventory, and bank. You will see that the total assets add up to 980,000 Rand. The rest of the statement indicates the equity, which consists of the share capital, retained earnings, and a general reserve. Then there's also some non-current liability in the form of the long-term loan that's being taken over. And then there are some current liabilities where they are owing to trade creditors, to SARS, and also to shareholders. The total equity and liabilities also add up to 980,000, I beg your pardon. Then there are some additional notes. In the first note, it says minor was able to sell its vehicles for 77,000. So you would find that vehicles were one of the assets that were not taken over by Mega. So they sold this to a different party for 77,000. And then I've highlighted an important sentence there. It says, all non-current assets are held under the cost model. So this is important because if we look at the steps that I've listed on the slides, it's important to remember that if it should use the revaluation model, if the company applies the revaluation model, we need to be wary that we must first perform revaluations before we continue with our step one. So some revaluations still need to be done if it is the revaluation model and if the value of the market value of the asset has been indicated to be more or less. So now we can just jump into step one with this question, but had it been the revaluation model, we must first do the revaluations, create the revaluation reserve, which will also be closed off in step 3, and then we can start with step 1. Right, in note number 2, it says minor paid off all its creditors as well as the amounts owed to SARS and the dividends owed to shareholders. Creditors charged interest of 5,000 Rand for late payment. Then number 3, a total of 10,000 was recovered from trade debtors. A further 8,000 need to be written off as bad debts. Then liquidation costs amounted to 10,000 in total. In the required part, they ask you to journalize all the liquidation general journal entries that should be recorded for the voluntary liquidation of minor Pty Limited. All right, to save a bit of time, I've already just set up the skeleton of the steps. So there's step 1 to 7 that we need to do in order to answer a question like this. And I want us to start with step 1. So step 1 says, we need to close off all the assets except for the bank account. So here we need to apply a bit of logic. If a account had a debit balance, it should now be a credit balance so that it can be closed off. Or if it had a debit balance, it will now have a credit balance because it needs to be closed off. So for property, you will see that I am now referring to the statement of financial position. And for the property, it had a cost of 600,000 and it had a accumulated depreciation of 200,000. For the machinery, there was a cost of 300,000 and an accumulated depreciation of 80,000. And for the vehicles, it was 250,000 Rand cost price. And we need to also remove the accumulated depreciation of 150,000 Rand. There were some trade debtors to remove at 60,000 and some inventory at 50,000. You would observe that the bank is not closed off. The bank is always closed off within the last step in step number 7. We need to make it balance the debits and the credits of step 1. And I've added up because it seems to me like the credit side was more. And so I added it up. And the balancing figure will be here on the debit side, and it's called the liquidation account. So I'm going to take the total, the 1,260,000, and I'm going to minus the debit entries on that side to get to a balancing figure. And the total then for the liquidation account is 830,000. In step 2, we need to close off our liabilities and pay whatever should be paid. So if I refer you back to the question, it said all the creditors was paid as well as SARS and the shareholders, and the creditors also had interest charged of 5,000 Rand. So how do we approach this? Well, if I look at all my liabilities, I have a long-term loan, then I have creditors, I have SARS, I have shareholders for dividends. So I need to go and close off my long-term loan. I need to close off some creditors. I just need to create more rows here. We have SARS, I believe. And I believe we had some shareholders for dividends. And then we also had to make bank payments. You just insert more lines. Right. So there are some bank payments that need to be made. If I look at the long-term loan, I'm going to debit it by 150,000. The creditors are 52,000. The shareholders for dividends was 60,000. I'm just double checking my question to make sure that I don't use the wrong amount. And then SARS was 27,000. So for the bank account, there were some payments that had to be made out of the bank account. So remember, the bank account is now not closed yet. So we don't do opposite side calculations for it. If it still decreases on the debit side, it increases on the debit side, decreases on the credit side. Right, so for the bank, what do we have to pay? Well, they say we pay off all the creditors. So we have to pay the 52,000 owed to the creditors. We pay off SARS, and we pay off the 60,000. And then there's additional 5,000 Rand that we are paying for, which is the recording of the interest for late payment. You will find that this account does not balance, and again, the balancing figure will be the liquidation. And I'm just searching now for a total here on the debit side. And of course, the credits need to be the same value. And therefore, the liquidation account will again be my balancing figure. 145,000. Right, then we are moving on to our next step. Before we move on, there might be a question around the interest. Why the interest is not, there's no entry for the interest. So if we had creditors charges interest, the entry on its own would be we debit the liquidation account and we credit the bank. But now that we have credited the bank with the 5,000 because it's also included here, then the liquidation account balance that we've calculated here does automatically exclude the 5,000. So it would be 150,000 long-term loan minus the 5,000. So this 145 is made up of the 150,000 because that's an amount that we did not pay off because it's been taken over, minus the 5,000 of the creditors. So with the sum of this credit total, the 5,000 has already been taken into account because for credit entries in the liquidation account is an increase, debit entries is a decrease. So you can treat the liquidation account the same way that you treat an income account. Right, we are on transferring the retained earnings and general reserve. So this is all the reserves except for your share capitals. Right, so in transferring that, I'm going to say retained earnings will now be a debit. Also the general reserve. And it's being taken to our liquidation account. So for the retained earnings, if I go back to my statement of financial position, there was a 300,000 Rand listed there. And then for the general reserve, it was a 155,000. And the sum of that will then be taken to our liquidation account. Right, then that was step 3. So as you can observe, it's very important to know the steps off by heart. Step number 4 is paying your liquidation fees. So that's easy. We're going to debit the liquidation account and we are going to credit the bank account. And the liquidation fees are told in note number 4 and it says it was 10,000. Right, we're on step number 5. And that is to recognize the purchase price. So for the purchase price, we have been given a table at the very beginning of the question. If I add up these amounts, 500 plus 200 plus 50 plus 42, and I minus 150,000 from it, then I get to a total of 642,000. So according to my calculator, if I do the sum of function here, I get 642,000, and that is the purchase price that I should now be accounting for. Then going back to the memorandum, I'm going to say for the purchase price, Mega is paying money to us, so the bank account increases, and we put it against our liquidation account. And that was 642,000. Right. Some places I have too many rows, and then in others I don't have enough. We are on step number 6. The sale of assets and the debtor collection. Right, so here we account for the assets that were sold to a third party and not necessarily to the person taking over the assets and some of the liabilities. So if I remember correctly, we had here the sale of a vehicle and there was some data collection worth 10,000. So if I go back to my question, you will find that it says here 10,000 was recovered for the trade debtors and there was a 77,000 that was collected for the sale of our vehicles. So to account for that, I'm going to again say I increase the bank account. I credit my liquidation account. And the amount here will be the 10,000 collected from debtors, add the 77,000 collected from selling the vehicles. Something interesting that should be taken notice of is this item here where they talk about the 8,000 Rand bad debt. And that's kind of a trick that they put there because the 8,000 Rand is not accounted for because it affects the same account and thus the effect is zero. So unlike the bank account that has not been closed off, the debtor's account has been closed off. So if we look at writing off bad debt, what we normally do is we say debit the debtor and I beg your pardon, debit the credit loss, credit the debtor, and then we have an amount of 8,000 that we have now written off. So the problem here is that income and expense accounts are accounted for as the liquidation account. So you will, for example, see with the payment of the liquidation fee. The liquidation fee is an expense, but we take it to the liquidation account and against the bank. So the bank account still exists, but no income and expense account other than liquidation account exists. What also happened is that the debtor was put against the liquidation account already. So there we have the debtor put in the liquidation account. So any changes to the debtor also needs to be taken to the liquidation account now because the debtor is inside the liquidation account. So in effect, if we now should account for a credit loss, we're basically going to say debit liquidation account because it's an expense, and then credit liquidation account because the debtor is inside the liquidation account and it's the same amount. So if we say plus 8,000 minus 8,000, we come up with the same amount. So the effect of the bad debt on the liquidation account is zero. And that is the reason why it's not accounted for here. I know that's a question that sometimes comes up. So it's important to see that, for example, the payment of the liquidation fees were treated differently. It was put against bank because bank wasn't already in the liquidation account because it says put everything in step one, all the assets in the liquidation account except for the bank. But the assets that have been put in the liquidation account is now also part of the liquidation account. So this happens and we add and subtract 8,000 and the effect is Rand null. Right, we are on our last step, step number 7. And here we need to pay our shareholders. So this is the step where we close off our liquidation account, we close off our share capital account, and now the bank should also be closed off. So to close off the liquidation account, we need to go and find its subtotal and put it on the other side. So if I look at my liquidation account entries, I had a negative entry here for liquidation because the liquidation is treated as an income. And if you debit income, then it's lesser, right? So we had a liquidation here, then we had a positive 145 there. Then we had a positive 455 there. We had a negative 10,000 there. We had a positive 642 there, and we had a positive 87 there. So if I take the amounts and I start by saying minus the 830,000, I add the 145,000, I add the 455,000, I minus the 10,000, I add the 642,000, and I add the 87,000, then I have a credit or a positive balance in the liquidation account of, I get 489,000. So because that balance, if I add the balances in the blue, I get a credit balance, a positive balance, I now need to remove it. So the liquidation account will then be a debit, and I will debit the liquidation account by 489,000. Then I need to close off my share capital account, and the share capital was a total of 236,000. This is simply read from the statement of financial position. And then I need to close off my bank account. And of course, in this instance, you can treat the bank as a balancing figure, but we can also cross-check the bank. So suppose that we had bank entries here. Let's put them in another color. So let's highlight them in green, right? So for the bank, we had a negative 144,000. Then we had a negative 10,000. We had a positive 642,000. We had a positive 87,000. And it needs to add up to this amount. So we're going to start with the amount of the bank account on your statement of financial position. And that's 150,000. And I'm going to take the 150,000 and then I'm going to use the green amounts and add and subtract them. So I take the 150,000 and then I say the first entry is step 2, where I have to minus 144,000. Then in step number 3, I have to not step 3, step 4, I beg your pardon, I need to minus another 10,000. Then I have to look at the purchase price where I debit, so I increase it by 642,000. And I also need to go and add step 6, 87,000. And I then get to this 725. So it is the 150,000 Rand in the bank. Just again, we're going to minus the 144,000. We're going to minus the the 10,000. We're going to add the 642,000. And we're going to add the 87. And that gives us this closing bank balance of 725,000. All right, so this was the solution for the question minor and mega. I think it's a very nice question, and it just goes to show how important it is to know your steps 1 to 7, because if you apply them consequently, then you should do very well in a question like this. I will be posting other questions in addition to this one, so I will also see you in our next video.